The Supertrend indicator is one of the most widely used tools in modern trading, but let's be honest, it has its flaws. In fast-moving or highly volatile markets, it often lags, leaving traders a step behind. Sure, you can tweak the factor value to try and adapt, but what if there was an indicator that did this automatically, analyzing multiple factor values at once and displaying the results as a clean, easy-to-read oscillator instead of a price overlay? That's exactly what this new Supertrend Oscillator does. In this video, we'll break down how it works, why it's more adaptive than a standard Supertrend, and how you can start using it to improve your trading. Let's dive in. First, let's break down what makes this indicator different from a standard Supertrend. A regular Supertrend plots a single trailing line based on one ATR multiplier. It flips between bullish and bearish only when price crosses that line. Simple, but limited. The Polyfactor Supertrend takes this concept to the next level. It runs 20 Supertrends simultaneously, each with gradually increasing ATR multipliers. Then, it measures the distance between price and each of those lines, blends all that data together, and outputs it as a zero-centered oscillator. The result? A tool that's no longer just a stop and reverse line. It becomes a momentum gauge that not only shows direction, but also the strength behind each move. When you first add this indicator to your chart, it appears as an oscillator at the bottom of the screen, and it immediately introduces three key visual elements that work together to reveal market conditions. The most prominent is the median line, also known as the market consensus. When this line is above zero, it turns blue, signaling a bullish trend, and when it drops below zero, it turns yellow, indicating a bearish trend. The slope of this line is just as important as its position, as a steeper slope reflects stronger momentum in that direction. Surrounding the median line is a green and red mesh, which represents the aggregate bullish and bearish readings returned by the multiple Supertrend calculations. A strong cluster of green with a small flash of red below it often suggests a minor retracement in an overall uptrend, while heavy red with small green flickers above it can hint at a bullish pullback forming in a broader downtrend. Paired with the median line, this mesh provides a clear visual map of the market's behavior and potential turning points. The third element is the standard deviation zone, shaded in white, which captures the variability of the market by measuring the standard deviation of all the differences between price and the collection of Supertrend levels. When the consensus line consistently moves above or below this zone, it indicates a trending market, while movement within the zone often signals consolidation or ranging conditions. Opening the indicator settings gives users a handful of powerful adjustments. The ATR length parameter defines the base length for all 20 Supertrend calculations, while the starting factor determines the factor for the shortest term Supertrend. This works in combination with the increment input, which controls the step size between each of the 20 Supertrends. Smaller increments produce a more detailed and responsive reading of market conditions. There is also a normalize option that allows the oscillator values to be constrained within a defined range, with two different normalization modes to choose from. Finally, you can customize the mesh colors and styling to match your chart aesthetic. With a full understanding of how each element works, the next step is learning how to apply this indicator in your trading to identify high probability setups and filter market noise. While this oscillator provides a wealth of information, it's most effective as a filter for your trade setups, rather than a standalone entry or exit system. In this example, we are looking at the euro-dollar on the daily time frame. We've paired the oscillator with the signals and overlays confirmation signals to pinpoint high probability entries. Here, we get a strong bearish confirmation signal, but notice that price is still above the smart trail. Instead of entering immediately, we wait for a clean break below the smart trail. Once that break occurs, we consult the Supertrend Polyfactor Oscillator to ensure price action is outside the standard deviation zone. If it is, that gives us the green light to execute the trade. From there, we can use the smart trail as a dynamic trailing stop and target a 1 to 1.5 risk-to-reward ratio. In this setup, we combined three layers of confluence: the bearish confirmation signal, the smart trail break, and a filtered signal from 20 Supertrend calculations via the Polyfactor Oscillator. You may also notice that right before entering the trade, while the consensus was bearish, we had a bullish mesh form right before we entered. This signals that the retracement in a downtrend was completed. All this together results in a clear, rules-based approach to timing trades with precision. That was an example of how the oscillator filters entries in a trending market. But unlike a standard Supertrend, the Polyfactor Supertrend also excels in ranging conditions. In this scenario, notice how the consensus line is trapped within the standard deviation zone, a clear signal that the market is consolidating. In these conditions, we switch the signals and overlays algorithm to Contrarian Mode. This allows us to target reversals rather than trend continuations. As long as the oscillator remains inside the deviation zone, we can look for market tops and bottoms, entering trades only when a contrarian confirmation appears. From there, we aim for either a 1 to 2 risk-to-reward ratio ratio or a move to the opposite side of the range, further displaying how this application of the Supertrend can be far more useful than a traditional implementation. And that wraps up our deep dive into the Supertrend Polyfactor Oscillator, a powerful evolution of the classic Supertrend that transforms it from a simple stop and reverse line into a dynamic momentum and trend strength gauge. With its 20-layer analysis, deviation zones, and real-time filtering, it's perfect for identifying optimal market conditions and avoiding false signals. You can start using it completely free today at LuxAlgo.com/library. For the best results, combine it with the Signals and Overlays toolkit. Features like Smart Trail and Confirmation Signals make it easy to filter entries, manage trades, and capture trends with precision. You can try it risk-free for 30 days at LuxAlgo.com. Follow us on X for daily market insights, trade setups, and strategy tips. Thanks for watching. Trade with confidence, stay disciplined, and we'll see you in the next one.